Hi everyone, my name is Julia, and today I have a big question for you. So listen very carefully, pay close attention, all right? Who in this world does not like free money? Like receiving money for doing absolutely nothing. Absolutely nothing. Nobody, right? I know you're going to say that everybody wants free money. Money that you don't do anything and it just keeps coming every month. Wow. I'm sure it's only aliens that will not want it. But do you know that even if you show aliens how to collect free money, you'll be shocked that they'll be interested. So, this is the Julia Inspired Lifestyle channel, and in this channel I talk about how to earn money online, how to save money, and how to multiply money. So it's about making money, managing money, and multiplying your money through investing in stocks. And because I'm a lover of stock, you can call me Julia the Stockaholic. I'll definitely wear it with a badge of honor. Alright, so have you subscribed to this channel? But if this is your first time of bumping into this channel, you're going to be so blessed watching this video today. And if you're a returning customer, I'm super proud of you, and I'm so happy you're part of this journey, and I hope you're learning. I hope you're getting loads and loads of value from this channel, because that's the motivation I get to make more videos. And I promise I will do lots of videos that you would watch and it will add value to your life. All right? So the real question for me is it possible for you to earn free money doing absolutely nothing? The answer is yes, and I'm going to show you. Do you know that passive dividend income is truly passive? Does it work? Yes, of course it does work. Dividend stocks are now popular. It's money you earn doing nothing, just by simply owning shares of dividend paying companies or ETFs. You know, there are some ETFs that pay dividends. So there are two things: dividend paying companies and then the ETF paying index funds. So you need to understand the two of them. So if you do have shares in these companies, you're sure of getting paid every month or every quarter. Can you imagine? January, February, March, April, May, June, July, August, September, down to December, you're always receiving dividends from these companies. So let's at least look at the Investopedia definition of dividends. So a dividend is actually a distribution of some of a company's earnings to a class of its shareholder, and it is determined by the company's board of directors. So what it means is that the board of directors sits and then they talk about the dividends, profit they have made, how much should they do for dividends, should they increase it, should they reduce it, should they pay what they've paid in the last quarter. They do all these meetings and they come up and set a dividend. First of all, they set a declaration date, the date they will announce that they'll be paying dividends. Then they announce the day that people will be receiving. And then they are going to announce the day that if you want to get that dividend, you have to buy shares in the company before that particular day. So we're going to break it down. But dividends may be paid out in cash or in form of additional stock. So most times I personally receive my own as is, stock inside my stock wallet, and I can use it to reinvest, or can even use it to buy another company's stock, maybe another dividend paying stock, or or I can even withdraw. So it's actually very flexible. You can do anything. So the distribution is actually to eligible shareholders. That's what I said, that when they announce the declaration date that they'll be paying dividends, then they set a date for people who are just getting to know the company and they want to buy shares, or existing shareholders who want to buy more. So if you buy before the ex-dividend date, you are sure you are getting paid some interesting dividends. All right? But you need to know this, all right? Do you know that sometimes companies can also decide to increase their dividends, and sometimes they also reduce their dividends? A clear example for increment in the dividends is Coca-Cola. For years now, they have consistently increased their dividend payout. Almost like every year, they are increasing their dividend pay. But some companies have reduced theirs, and some other companies like Disney has actually suspended their own dividends since 2020, and that is due to the COVID-19 pandemic. It really affected them that they had to put an end for the time being. This is 2022, and the company is looking into whether they need to resume their dividend paying or to just continue until they make a headway. So, but that is an information that we need to know. But this is what you need to know. I love dividend ETFs because ETF is like a basket of top well-doing companies. So we have ETFs in technology, ETF in commodities, gold ETF, oil ETF, so many ETFs. And then we have the popular ETF, the VOO, which has the top 500 companies in America. The VOO has the S&P 500. It tracks the index of the S&P 500. And that is one ETF that pays, and at the same time, the stock also grows. Amazing, right? But now, the thing I want you to learn from this video, because each time I do a video, I want you to learn something very valuable, all right? The first thing you need to know is, what do you look out for when you start investing in the stock market and you want to buy dividend stock or dividend paying ETF? What do you consider? Like, do you check out for good companies that pay dividends so that you don't lose your money? Because sometimes people put in money and they lose money too. Sometimes some people pay attention to dividend yield. So many different ideas. But I just want to give us an eye-opening session where you can see how to find out the best dividend paying companies. So I'm going to run it through so that you can see for yourself how I do some of the analysis, and you can learn that. What I'm trying to do is helping you to avoid dividend trap. Some of them may look very shiny and glossy. When you get in, you will see that there's something they just did not explain very well to you. So with that being said, let's get in, and I'm going to show you something very interesting. And at the end of this video, stick around, because I'm going to share 5 dividend companies I have in my portfolio. And if you're looking into investing in stocks, you should also look into those 5. I also have compiled a list of 30 top dividend paying stocks and ETFs that you should have as your playbook. And I'm going to tell you how you're going to get access to that particular list. All right, so stick around. Let's do the analysis. So I will show you 1 or 2 things you need to learn. All right, so this is one of my tracking tools, and it is called Yahoo Finance. We also have the Google Finance. I have been used to using this Yahoo Finance, but just go on Google and type Yahoo Finance or Google Finance, and you're going to come to this page if you type Yahoo Finance. And it's very simple. This is what I do. I come to the search and I type in the ticker symbol of the stock I'm looking out for, or I type in straight. So I'm going to start with Coca-Cola. Okay, so let me explain something. Assuming you invested $1,000 5 years ago. So let's take this. So you can see here, you can see 5 years here. So once you click on this 5 years, it will show you what has happened in Coca-Cola company for the last 5 years. All right. So let's click on 5 years. So you can see at this ticker symbol, this is 1st June 2017. All right. Okay. 1st May 2017 till today being the 5th of April. So as on that particular day, the shares was worth $45.47. So you can see that $45. So, but if you check from March 2017 up until right now, which is April 2022, it was then at $44.85. All right. So this is the case study, and I'm using Coca-Cola. So I have showed us from Yahoo Finance how I go into Coca-Cola and I do my little analysis by checking their ex-dividend date, their earnings date, the dividend yield, the value of the shares, and then we were able to check 5 years record. So now I'm just bringing everything together. As at 2022 April, I was able to capture $62.98 for Coca-Cola shares, and they are paying dividends of $2.8% per annum. All right. Now, if you had invested $1,000 5 years ago, then 5 years ago, Coca-Cola share was worth $44.85. That means with $1,000, you will be able to buy 22.9 shares. So this simply means that from 2017 to 2022, the share capital growth per share of the Coca-Cola has moved from $44 to $62. That means for every share you own, you have earned $18.13. So if you check $18.13 and you multiply it by 12.9 shares, the person would have made capital gain growth of $415. Now, assuming Coca-Cola has been paying dividends anyway, but it has not been 2.8% per annum. It used to be less and they've been increasing, but let us assume that all through 5 years they were paying with 2.8%. That means in that 5 years, the person would have earned $140. That means your total worth of your money in Coca-Cola is your $1,000 plus your $140, which came from the dividends, and then the $415 that came from capital growth gain, that the shares have grown from $44 to $62. You now have a total of $1,555. And please be minded that compound interest has not been included, because compound interest is interest upon interest. So assuming the person was paying back the entire dividends back, the person will have more than $1,555. So this is one way you have to analyze your shares, so that you don't just get into the dividends and because they are paying good dividends and you don't check some of these things. That is how you check. So this is for case study 1. Now let's go over to case study 2. Okay, so this is the second dividend company, the case study number 2, the Annaly Capital Management. You can see when I even captured it, it was $7.02. You can see it has even dropped while I'm having this presentation to 6.94. So if you check 5 years performance, you can see that 5 years ago it was at $12.05. It was $12. So once you hold on to it, you will see the line and you see the one on the black, 12.05. That's how you know 5 years ago. That was May 2017. Up till now, it has grown down to 6.95. So people who are enjoying the dividend in this company do not realize that the value of the $1,000 they actually invested has gone down. So you can see the movement this way. So you can see from 2017 here down till this time, it has really reduced. Can you see that? So this is one thing people do not look at when they are looking into dividends. They are just concerned about the percentage. They are not looking at the performance. So this is what I call the dividend trap. So if you are not careful by checking the past performance, you will see that some of these companies have even lost like 40% of the value of the shares as the years are going by, and people are enjoying the dividends. So this is one of the mistakes investors make. Because someone just posted that this company has high dividends, they will just rush in and buy it without doing the due diligence, without doing any research. This is why I am doing this particular training, so that dividend investing is very sweet, but you have to do your due diligence. And that is why it's better you belong to a community, or you have a mentor or a coach or a financial advisor who is overlooking the decisions that you're making. So this is case study number 2, which is NLY ticker symbol. This company stands for Annaly Capital Management. Already we have seen the company from the Yahoo Finance, and we have seen their growth so far. You can see that from 2017, their shares used to be $12. Now their shares has dropped to $7. So that means the person who has invested $1,000 is actually losing money over 5 years. So let's go over it. So 2022 April, the value of the share is $7. Okay, and the dividend is very high, 12%. That's 12.46% per annum. So if you had invested $1,000 5 years ago, the share worth was $12. You can see it here. That means at that time you was able to buy 83 shares. Okay, stay with me. So that means that the share capital was degrowing. So they had a loss of $5 per share. So if you check $5 per share over the 83 shares the person that purchased with $1,000 had, you can see that the shares has grown from $1,000 down to $582, because the value of the loss is $417.49. So, but let us assume that they have been paying 12.46% every year for the past 5 years. That means the person who invested $1,000 would have $620. Now, if you check the total worth, you can see that because the $1,000 had reduced by $417, so the actual worth of the $1,000 now is $582. So there was no capital gain, rather there was capital loss. And if you add it to the $620, which the person has earned for 5 years, the person will be at $1,202. So for someone who is thinking, I've invested in this company and their dividend is so high, they are paying me 12% per annum, whereas this other company is paying me just 2% per year, 2.8. So the person who is earning 2.8 may think he's going to be earning less, without knowing that over 5 years he has actually earned more than the person who was enjoying 12.46%. I'm sure now you are beginning to think, wow. So I'm going to give us a third case study, which is an ETF. I told you I love ETFs a lot, and I actually use ETFs. So this is the last one, which is the DHS. Can you see that? Currently is on $88. Alright, and typically we'll look at the 5 years. So you can see something beautiful here. Can you see this? Can you see this? So from 2017, you can see it moved from 68, look at the black, 68.35 up until 88.83. This is amazing. This is the kind of stocks that are paying dividends, that are growing, that you need to look into. You can see they're making progress. Maybe in the next 10 years or in the next 5 years, they'll be in $150. So imagine someone who put in $1,000 5 years ago, and the person is willing to keep it here for the next 5 more years or 10 more years. Probably this will be in $150, $170, $200 or even more. Imagine how much the person would rake in. So this is one of the reasons why long-term investing is important. If you are putting in your money to take it in 6 months time, 3 months time, then you are definitely going to be heartbroken, because maybe at the time you're trying to pull out your money, maybe the time the market has dipped low, it has gone down. Probably it may be, okay, assuming someone was selling 1st of April 2020, you can see it has moved from the $68 to $62. Can you see it? So if you decide to sell at a particular period and you're not watching the market and the performance of the stock, you may make mistake and sell at a loss, and you complain, or you know when you lose money, it's always painful. This is what I don't want you to experience. All right, so let's continue. The third case study is DHS ETF, which is called the Wisdom Tree. In case you want to check it out, you can type Wisdom Tree or you can type DHS. It's going to pop up in the Yahoo Finance. Now, as at April 2022, the current value of the share is $88.73. All right. Now, the dividend yield is 3.65% per annum. So, if you had invested $1,000 5 years ago, the shares of the company as at 5 years ago was $68.23. So, with that, you'll be able to buy 15 shares of the company. So you can see the capital share. The capital growth is $20.05 per shares. So if you check the value of these shares by 12 shares, you can see that the person has made $307 because the share capital of that particular company was growing. And let us assume, as always, that we are paying 3.65% per annum for the past 5 years, even though it may not be as such, but let us use that particular instance. This person who invested $1,000 would have made $182.05. So the total value is the 307, which is the growth the person has enjoyed, that the company has moved from spot A to spot B. So he has grown. And then the $1,000, and then the $182.05 from the dividend, the person will get $1,489.05. And this is because we did not include the compound interest. If we add the compound interest, it may be the same value that the Coca-Cola shares has given to the person. So now, I'm sure this has really opened your eyes. And this is exactly one of the ways I do my analysis. So if you do not understand some of these things, the first thing you're going to do is you're going to dabble in and say, wow, this company has high dividend, let me quickly rush in. If you don't do the analysis very well, you're going to get into a lot of trouble. Another thing I'm going to show you is how you can also check for the dividend ETFs, where you can go and read about them and see how they are performing. So let's go there. So for ETF, there is this tool I use called the etfdb.com. So this is called the ETF database. When you come into this particular website, you can go to these 3 dotted lines, and then you can check for different things. You can come here and do your research. You can see a lot of information. You can see the dividend ETF. You can see the leverage, the invest, the top ETF sectors, the top ETF issuers, the top ETF industries. So you can go through and read so many things from this particular place. So let's get into the dividend ETF. So you can see it has opened up, so you can see the different information. There's so many information you're going to see here, but I'll definitely go to the returns, so I can go and check the returns. So you can see some of the ETFs here. Okay, you can see VIG, Vanguard Dividend Appreciation. You can see all the information that they've given out here. You can see 1 year growth, 3 years, 5 years growth. All right, you can also see the VYM. You can also see the SCHD. You can see DGRO, BVY, SDY. These are different types of ETFs. You can take your time and go through them and do all the research that you need. So you can see it's so much. So you take your time and you go through all of them. So you can see it has the first page, second page, third page, fourth page, fifth page. So you can do all the necessary research you want to do. If you're done with the returns that they have done, this is the value of what they have, each of them have done. Okay, let's take it like this. This is another wisdom tree. Okay, so you can see here it's showing you that over the last 5 years he has grown 37.32%. Over the last 3 years he has grown 26.86%. Over the past 1 year he has grown 4.57%. Over the past 1 month he has grown 1.16%. So every information you need in terms of the returns, you have them here. So if you go back again and go to research, go back to dividend ETF, you can pick expense ratio. That's how the amount you make as payment, because this is passively managed funds. The ETFs are passively managed funds. So you can come in here and you can look at different ETFs and you can see their expense ratio. So for example, for this particular VIG, which is the Vanguard Dividend Appreciation ETF, and it contains the large cap growth equities, you can see that their expense ratio is 0.06. So you would divide, so for every $10,000 that you invest, you pay $60. So I would like to introduce TMI to you. TMI is called the Millennial Investors Community. This is where we learn how to invest in stocks and do not lose our money. So it comes with training, it has a course, we have worksheet, we have a lot of free ebook, we have a resource section, we have a support group. So everything you need is right here and we'll support you. So have you always been thinking, how can I plunge into the US stock market and make money, not just for yourself, but for your generation, for you, for your children, and for your children's children? If you've been so blessed, please drop some comments in the comment section. If you have any question, if there's a particular stock you want me to review for you, you can drop it there. And if you found this very interesting, if it has truly blessed you, please like, please drop a comment and share this video and watch it again to understand it very well. And if you're interested, shoot us a mail. At the same time, you can join our free Telegram, or you can click any of the links and you can join our community at a very small fee. It is truly worth it. So I will see you in the next video.